Good evening, everyone. Good afternoon, good morning. I guess it depends on where you are in the world. How is everyone doing? Welcome to Market Kickoff with Nick4ATick. Hope everyone's had a wonderful weekend, wonderful Sunday, wonderful week 2 in the NFL here. I enjoyed seeing the Saints either being a really good football team or just a really, really good team at beating really bad teams. The Cowboys got absolutely smacked, and that was actually hilarious as me, someone living in Dallas, who is not a Dallas Cowboys fan whatsoever. So I always do enjoy hating on Jerry Jones until he's no longer, it basically is no longer cursed by the football gods whenever he decides to step down from being the owner, GM, the old Jackie Moon basic character with the Dallas Cowboys. So enough about the NFL. I hope everyone had a wonderful weekend. It's a big week. It's been a big couple weeks, to be honest. I really don't know if this is going to be the longest prep. Just being, if you've been paying attention, we're back in that balance range from hell that I had been talking about a few weeks ago. And with that comes, a week historically when I may not like to do a whole lot. That being 2 of my least favorite weeks, which would be options expiration, as well as, unless you've been living under a rock, it is finally here, FOMC week. The only one that has mattered since the last one that mattered, I guess, is how we are going to continue to say this for the foreseeable future, where this is the first time in years. What is it? Since, I guess, maybe 2019, 2020. Yeah, so I guess it would be 2020 when the last time we actually got the Fed to cut the Fed funds futures rate. So that should provide us with some aspect of volatility this week as people are I guess are going to hang on every word that Powell and the team are going to say, as well as, forecast what cuts look like and how many for the next couple of months, couple of years. We shall see. The dot plot is probably the only thing I really care about. I think it's pretty obvious that, whether we actually are 50-50 that the Fed's going to cut 25 basis points versus 50 basis points. I personally am in the camp, if it's 50, that's probably not a good thing. But who knows? It's just a lot of, window dressing for what could be a relatively balanced and boring week. If we're looking at the charts and you're looking at the last 2 weeks of distribution, as well as even including the old balance range from hell up here. I mean, a lot could happen, but what we did was basically move, well out of that balance range to the bottom, what we did this 2 weeks ago, and kind of made, an attempt to go, break 5,400 on ES. And then naturally with that kind of, one-way distribution to the downside, the last week we had the same almost repeat of that distribution now to the upside, just to push us right back into this lovely balance zone. So, with that in mind, it's kind of the old prep rules here where there's not a whole lot I'm going to be looking to do, most likely in the middle of this balance. And if we're looking on the right here, this longer time frame point of control, as long as we are hanging around, 5640s, 5650, 5630, it's going to be sit on the hands time until we really do break this range. If you guys remember from a few weeks ago when we were talking about, how would I prep with this type of balance? Not really much, with the logic of the market, may just kind of ping pong around various option levels, given that it's options expiration, and then you can quintuple that with FOMC. It really may just be that week where we're kind of just pinned between various price points, and most likely those are going to be options driven. So that could be, us making a new all-time high and falling back into this range. It could be going back and retesting, the lows of last week and seeing what happened. I would imagine, we are going to be honest, even with FOMC and, options expiration at the end of the week, there's a good chance that the real move may not happen until the following week when everyone's had a chance to kind of digest this information and we're no longer potentially pinned with, options activity until that might move the following week as new positions are kind of established, into Q4. I know we might hate thinking like that, but it's very possible that, you may start not really seeing this kind of unclench of this area until we actually have something that may break us out of it, or you have positions that are actually lining up for us to go find, new prices. And we just haven't seen it. It's just been volatile. It's been sloppy. It's been, granted, last week, higher volume at times, and we had a very, if you guys remember, probably the best day. I think that was the most fun day that a lot of us had because it was probably the most interesting day to trade over the last few weeks. Or even all summer, to be honest. May have been Wednesday where you really did have, a pretty good bi-directional rotational type day, almost a double trend day. I think Dakota and I were talking about last week where you had a pretty violent sell down and then a even more violent move to the upside to push us all the way back to balance. So, there's a lot we can talk about, but more often than not, when we're in this type of area and when we had such a violent move one week to the downside and now another violent move in the latter half of last week back into this area, it's really just kind of, you have to look at this as, well, until we are realistically, probably above, what do we call this, 5680, maybe if I'm even looking, up towards 5,700, there's not even a lot of enthusiasm for me to want to try to trade this as a breakout to the upside. Even if we, kind of get above 5680s, you're talking not a crazy move. In fact, that we may even get, and at any point, I would say anyone could kind of shut the door and push us back into this range. So for me, longs are weirdly less interesting to me now as they were when we were back in this balance range, to be honest. I mean, yeah, we absolutely could go make a new all-time high, hit the air horns, and, everyone have a party. But given that the Fed's cutting, I just more so am just like, until I see the reaction on the first cut or even things like next week, I just don't want to be caught with my pants down in a low effort kind of move to the upside. If we get it, I will gladly kind of scalp it and take points, but I am more just going to be kind of sitting on my hands this week. Historically, guys, options expiration is just not the most fun week to trade. A lot can happen, but you also can just be, can sometimes get very boring weeks. And there's moments when it really depends on kind of where we're trading based on what I'm seeing as far as longer term options activity or on the, week expiration even. So the early part of this week, I would imagine a lot of what I'm going to be doing is sitting on my hands and, kind of digesting some of the new information, that we are going to get with FOMC and with the dot plot. Sorry guys, should have clarified this. I'm still on the U contract for right now. I most likely am going to roll tonight. Just really might depend on volume, but I'd like to see how it kind of shapes up given that it's FOMC week and everything else with contract roll. But likely I'm going to be, talking about the Z contract tomorrow on TopstepTV. So for the time being, the markets aren't opened. I haven't rolled. And just because I'm not trying now to confuse everybody with old and new levels, because I know unless maybe some people have been really actively looking at the Z contracts. If you didn't know, I mean, some of my charts inside of TradingView or even MotiveWave, I have to tweak a little bit. So I also want to use numbers and reference, points that we've talked about for the last few weeks versus me now throwing numbers at you that are like, 57, whatever that we're talking about. So I just don't want to confuse everybody. Since we've been talking about this, the volume profile looks clean, but the logic is we're going to be rolling here in the early part of this week, most likely, if you haven't already, when the market opens here in 4 minutes. So just keep that in mind. Still using U. We will be using Z, but I didn't want to kind of confuse and, change the same type of numbers that I've been mentioning and talking about for the last few weeks. So with that in mind, this pivot number I'm going to talk about is probably going to just be irrelevant here when we do actually, roll to the Z contract. But for the most part, when I'm looking at this distribution and when I'm looking at where we are right now, I'm not interested in probably longing this area to go make a new all-time high. If I'm going to do that, I would love to see us come down, maybe towards most likely what's going to be my pivot somewhere between 55.70 likely to 55.60 is an area that I'd be looking for us to potentially come down, maybe reject if we're going to make a new all-time high or we're going to get bullish out of this week. I most likely would like to see some aspect of this profile here kind of cleaned up the same way we did, this past week from the previous week where, yeah, we went down, we made lows, we kind of had some indecision down here. You had a little indecision right where I'm going to make my pivot right now or thinking about it for this week. But you have aspects of, okay, we kind of have filled in some of this volume from the previous week, hence why you see such a build down here. And then we return to an area of higher value. Higher volume. So the same thing would be true for this week. I would love for us, this is kind of the, whatever I would call this, maybe the value area high from last week on ES is going to be somewhere around, I guess 55, 60, maybe even a little higher. Would have to probably look at this inside of MotiveWave to see which one of these three distributions actually is probably the next largest and, where was kind of the rest of the volume. But I think it's a fair level. And I don't know this green color off the top of my head. Let's see. Friday's point of control is right there. Let's see. Yeah, so if I'm looking at this, like I said, that low volume node from last week or that kind of lower volume area down here, you could even probably say 55 if you really wanted to get more bearish or be looking even at lower prices before you got too bearish. I mean, I wouldn't be shocked to even say kind of the lower aspects of 55.25, 55.30, 55.40 to be a better pivot. I'm going to have to kind of look and think about this a little bit more, but I think it's more than fair that we may come back for a portion of last week's range before we kind of make a decision on, where we're going to go next. Just given how much volume we've kind of traded in this general area over the last month plus, and with, most likely the market just going to be kind of sitting on its hands, waiting for Powell, waiting for all of that information. And then given that it's option expiration, we could kind of be wedged just to begin with, given where we're trading. You're just at an interesting spot. So I'm not in a rush to do anything, most likely, like you hear me say a lot of the time on Sunday nights. But this is really that situation where you guys remember when we were talking about breaking this balance previously, I didn't want to fade the move. And I really didn't that, last week or 2 weeks ago. And then this week, it even looked like we were going to continue to go lower. The market had other ideas once we kind of, ripped out of that low on Wednesday morning, Wednesday afternoon. So, when the market tells you something like that, but of course, naturally, it moves us back to value. So the same rules apply. I know I said this 2 weeks ago, but once this breaks, probably don't fade it. This one, I'm a little more, I think it kind of depends because of what's going to happen with FOMC. And like I said, even the fact that the market may not really move until it kind of decouples the following week. So I'm taking a little bit of, a grain of salt with even price action in the latter half of this week. You guys know FOMC is going to be an absolute, what show. And I think there's no shock behind that. And we are open here Sunday night, Globex open, kicking off. Naturally crazy spread so far already in NQ and roughly a 40-point range just to kick us off here inside of the NASDAQ. Even ES had looks like a pretty wild range already. So just something to keep in mind if you are going to be trading this. It already looks a little illiquid, but Sunday night into FOMC week, no surprise. But let's jump over to the NASDAQ. I've been talking about ES just to keep the numbers and terminology clean here. NQ looks a little different. We're still kind of in a, almost like I said, just like on ES, you had a almost repeat of the previous week. You had something very similar in in NQ, where once we broke that kind of multi-week balance there, we sold down, and then we almost had a almost similar size move to the upside as far as the weekly volume profile here. So, the same rules apply. We're in the lower aspect of, whatever, this old balance range. We're basically sitting right at the value area low. In fact, that's basically kind of, this old volume shelf up here at 19,600. We couldn't even make an attempt at last week. We pretty much stalled just below it, right around, 55 or 19,580s. So for us to get really bullish in NQ and go make a run to 20,000, you really need to see NQ honestly bid above 19,700. So if I'm really looking to really get long, that's probably where I'd be looking to really get a breakout long on NQ. Otherwise, I'm going to be somewhat hands-off. Probably, my pivot most likely is going to be somewhere around 19,200, 19,300. Just kind of seeing where from last week's profile. Yeah, I think 280, 290 may even be the spot. Just giving this a quick look. Same thing we talked about in ES. I wouldn't be surprised if we came up to 600, even made a run up here during the early part of the week, and maybe even failed back down towards that area. The same rule apply if we were to get some weakness early into tomorrow. That's probably a reasonable area where we may immediately find buyers if we were to get a lot of weakness in the early part of this week. Otherwise, do they defend basically Friday's low around 19,400 again? And continue this kind of, slow, grindy, bullish momentum back towards 20,000. I don't know. Much of that, the NASDAQ comes down to, what is NVIDIA doing? What is the Mag 7 doing? Naturally last week, I think we were talking, at least last Sunday in the NASDAQ, I was looking to see was tech going to be bought early Monday? And it absolutely was. We shot out of a cannon. I was looking to kind of buy the initial dip, or I said, don't be surprised given the kind of lows of the previous week. If we, this was a very simple location that made a lot of sense where at least in the early part of last week, we would find buyers, and we did. In fact, we really didn't have much weakness outside of the, that I guess post CPI? Someone please correct me. Was it CPI? Was it post CPI on Wednesday that we had the weakness? Or was it PPI? I can't remember which one it was. But you had that pretty, substantial sell that looked pretty bad, to be honest. That was a very violent, knife down. It was even more so on NQ compared to ES. So once you got that and we kind of rebid out of it, it's the same thing. We just were pretty bullish, and I didn't see really sellers looking to do, a whole lot. And Friday was a bit of a, slow grind kind of, mess. And we had a little fun on the reversal challenge, but there's so much like indecision the last few weeks, even going back to kind of early August, we really haven't moved much. And if you look at the NASDAQ, if we were to really zoom out, you do see a pretty decent, on the 4-hour back to all-time highs, a pretty decent trend. If I were to, do cran lines here, that's just something to keep in mind. If you were to really do this, I'm not a great cran line drawer, but, if we were to kind of move this and actually tag the wicks in the right way, you could see on a 4-hour, or this is a 1 hour, but on a 4-hour, it's probably cleaner because that's what I did the other day. You're in a bit of a downtrend from all-time highs. So it's just something to, like I said, keep in mind, keep in the back of your mind, I guess, and just be aware if we are continuing to kind of, make a new high and then sell off from it, which direction would I be looking for? Obviously you'd be kind of fading it back down. NQ has definitely struggled to really hold over 20,000 since we had our insane bullish June and July in the NASDAQ when ES was making a new all-time high every day for 7 days straight. So I don't know. I'm not a big cran line drawer. I do believe in, the power of 4-hour trends and things like that, if you've ever seen me trade. So just take it with a grain of salt, but also know that, something as simple as that drawing, it holds true, at least in a wider range, maybe even 100 points or so on the NASDAQ. But I see, us kind of rejecting on lower highs in the NASDAQ on a longer time frame. So just something to keep in mind. I couldn't tell you where that next fade would come from. If it's not right here, right now, it gets a little interesting. But the same rules apply here, guys. I'm going to be a little hands off. And until we really get over 19,700, it just is a difficult path to 20,000. And the reason being is, look at how many touches we had, going back to some of these old 1 hour like candle wicks up here. Like, look at all of this indecision and rejection at 19,700. So until we get over that with a lot of volume, and I see us clearly trading above it, it's really hard. Like, even going back to July, like how many rejections, as far as like a pivot spot from a longer time frame, I mean, that's a great one, this low volume edge right here. So if we're not trading above it, it's really hard for me to get 222 bulled up for a run to 20,000. When we are, yeah, by all means, jump on board with, the NVIDIA train up to whatever number that's going to be. But I need to see all those names bid. Speaking of bid, let's go to GC, because GC has been wild to watch. And if you guys remember a couple weeks ago, and even last week, and even on Tuesday night with Dakota, I think both of us were talking about being pretty bullish in gold. I had a feeling we were going to make a run to 2,600. I didn't think it was going to be last week, just given how much, balance we had the last few weeks, pretty much between 2,500 and 2,560. We just really couldn't go, make a crazy new all-time high. But naturally, once we did break out of that range, just like we talk about sometimes, when you have this much consolidation and you can see like a longer time frame D-shaped profile, near a high, near a low, or just an area of indecision like this, when it breaks, it's not something you usually want to fade. And you got that in GC, where once we kind of broke above 2570, made a new all-time high, it basically was off to the races. And now, you got to start doing things like fibs and retracements and things like that. Once we kind of get into an all-time high, like as far as having targets, it gets a little difficult. So the logic would be, once again, even something like gold here, I'm bullish probably all the way to 2,700, maybe even, higher if we actually get the true kind of recession trade. Who knows? But I'm never the first person to long something in an all-time high. The logic would be, hey, we're trading above 26. Think of this the same way we've been talking about concepts with volume profile. Gold is a better example of it right now. It's just because you had a breakout. Well, now if we kind of fail up here, I may be looking to, potentially find a rebid, kind of where we broke out. So if we're looking at all these wicks right here, probably in the 2560s, I may also look to scalp this down potentially, but I'd be pretty, scalp this short to the downside. But I'd be probably, tight leashed on my stops and just seeing if you could catch a piece of it. Or if we're already getting momentum to the downside, in the early part of this week, it's very possible we could, come back towards 2580, 2570. And that's probably where, honestly, I'd be looking to, if I was short, I'd be getting out. But most likely I would expect, buyers to step in at 2560, as well as, all the way back towards the 2550 kind of breakout area that we finally got on Friday or Thursday. I guess it was Thursday. So just something to keep in mind. I am very bullish gold. Like I said, I would not be surprised if we continue to go make, multi-week new all-time highs here. But given that we finally did break out, we may get more bullishness to start this week, but I would not be surprised to get some aspect of a rebid a little bit lower than where we're trading right now. On the crude front, we finally did look like we may have, if for all our crude traders out there, no one loves knife catching this one. We may have put in a temporary bottom for the time being. Who knows? It's been pretty wild and sloppy to kind of be, trading trading CL, and if we're looking at this at a multi-week time frame, I wouldn't say longs are still yet quite the safest thing in the world, probably until we're well back above 71. It makes me a little nervous. This is something that, like I said, I don't love trading crude. I always seem to lose money whenever I do trade it. I don't know why. It's probably, what's funny, and it can be trendy. It can be very streaky at times. It's just like, I always feel like I'm on the wrong side of one of these, violent moves either way. I just never seem to be on the side that wins. Even when it, you looks like it's pretty bullish, and then you kind of get the door slammed in your face. So for me, before I would long CL this week, I probably want us to be, trading with buyers somewhat in control above this kind of, high volume edge here, right around, let's call it 69.60. Yeah, 69.50 maybe. If I see buyers looking like they're well in control and we're kind of trading above this, that's probably where I'd be looking to long it at least to around 72, kind of go retest these old lows down here. But I am not planning on trading this, guys. This has been even if just looking at the last 2 weeks, you try to long this anytime. If you're not scalping and getting in and out, you have been violently ran over, day in and day out if you have tried to long this. And so there's no reason for me to believe that this may be over outside of using like old lows from previous years, previous months, old contracts, things like that. It's just, even this, like, yes, we rebid off 65s and are making a run towards, getting back above 70, but there's nothing here that, geopolitical things aside, that says we're not going to once again do what we've been doing, which is, okay, you kind of get a rebid and then it fails somewhere. So it wouldn't be shocking if we came all the way back up, maybe even made a run to 73, and then the door got slammed once again on everybody getting bullish and long CL. It's just been that type of violence. And I mean absolute violence if you look at the way this has traded the last few months. And I keep looking at it week after week, and there's a reason I don't trade it. I can't, I'll get, thrown around and punched in the face and, driven around in the inner city in the back of a van with NQ day in and day out. But I won't do that with CL. That just looks a little less fun to me. So with that in mind, and just looking at the profile from last week, the upper end of, CL's point of control is somewhat near the highs, and we're right around the previous week's point of control too. So that actually lines up roughly with that 69.50, 69.60 type area I would love to see buyers get control of before I'd be looking to long CL. But something to keep in mind there. Yes, I will absolutely, guys, show you my volume profile in more depth again, so you guys can actively see this. But yeah, we'll get to that in a little bit. So we have finally done it. If you guys have been tuning in to Market Kickoff with me, we finally did it. We have finally reached the end of the temporary end of earnings season, at least for a week or two. There's nothing on the docket for this week that's really anything to pay attention to outside of FedEx. I mean, you could make some cases for some others in here, but that's probably the only one that anyone's going to even care or talk about, or even, have talking points or reference on any sort of show this week. So just, nothing to, really be too concerned about. All eyes are going to be on, what the granddaddy of SPY says himself on Wednesday, and what all of his, talking feds decide on their next book tour the following week once the blackout period ends. But that's really the only thing that's going to move the markets outside of OPEX on Friday. You may have some violent moves as we position into FOMC, or once the dot plot gets released. That's another reason why I may not want to trade, given its OPEX and how repositioning may work, or adjustment of position, or rolling positions given its contract roll, all the other fun things. This is just going to be a terrible week for aspects of trading. So just keep your head on a swivel. I know I said that last week. This is another one where a lot can happen given you have such a a high volatility type event on options expiration, and the real move, the move that might matter to the market, may not come to the following week. So given that it's, like I said, a slower, there's no earnings. Even on the news front, there's obviously FOMC. We have all these other ones. You have Canadian CPI, you've got retail sales, you've got, some of the other typical ones that we always get. You got housing starts, you've got, what was the other one? Jobless claims. And I know we always have been talking about jobless claims and a lot of the employment data kind of being the new flavor of inflation, if that makes any sense for what the Fed is going to do. That's definitely true. But like I said, I'm more interested as far as anything else. I think we all know it's going to be 25 basis points. If it's anything more than that, I think that's more red flags than good things, but who knows? I think it always is just about what they're seeing and how they're talking about it. So for me, I'm really looking at not only to the press conference, which obviously is going to be just a probably good TV. I'm sure they're always just going to continue to ask, like they did last FOMC, when cuts. So you got the first cut, and the next question is going to be when more cuts, when bigger cuts, I would imagine, because that's just the only thing these financial analysts seem to care about, or have any, to use their platform where they actually get to sit in a room with Jerome Powell and actually ask maybe an intelligent question. No, they ask the stupidest ones, like, when cut. So naturally, I'm looking for realistically what the dot plot's going to look like going forward, and then how, just like anything else with Fed funds futures and bonds traders, okay, what is the Fed showing the path of cuts for the next few years now that we're finally getting our first one? But then how do the bond traders and the Fed funds futures traders actively react to that, since nobody has believed anything the Fed has been talking about, or traders rather have not believed anything the Fed has been trying to do, talking about, and pricing in for months. If you guys remember, we were talking about, hundreds and hundreds of basis points of cuts back in like March of this year, and like cuts were on the way like well early into this year. So now that we're finally getting them, maybe somebody's finally on the right forecast path, but I highly doubt it. We have yet to see anybody actually actively forecast the right type of projections in this. So I wouldn't be surprised to see that failure of an analyst still continue to be the case going forward, but we'll see. Outside of that, you got a 20-year bond auction this week. You've got, we said retail sales, obviously FOMC, no surprise there. Philly Fed, that should provide a nice little, and jobless claims. So the 7:30 on Thursday, definitely going to provide a bit of volatility, probably nothing too crazy. And then we'll have a gaggle of Fed speak, most likely in the latter half of this week into early next week, as they continue to, like I said, go on their book tour. So nothing crazy. The biggest volatility event is FOMC and Powell's press conference, and then how the market reacts going into options expiration is probably the, potentially the larger thing to watch. So just something to keep in mind. Yeah, hoop. I'm sorry for not mentioning the event of the week being the Cracker Barrel earnings. That got me. Thank you for that. I need some water. Sorry, guys. All right. Everyone's next favorite topic that we've been reviewing each time on the show on Sundays, as well as on TopstepTV during the week on Fast Markets, is going to be some of our trader-rated options data. So this is the longer time frame gamma exposure from Friday's close. So something to keep in mind if you were watching the last couple of weeks, you saw a lot of negative gamma exposure, even I think on maybe it was Tuesday or it was Monday on Fast Markets, because I forgot the team was gone. So it was just Dakota and I. We didn't look at this. So Monday we did see a lot of negative gamma exposure on the 0 DTEs, as well as on the longer time frame. And even Sunday night, when we were looking at the previous weeks, you saw a lot of that skewed to the downside. But now this almost looks like what it looked like, if you guys remember, when we were back in this balance range a few weeks ago, where everything was pointing towards gamma exposure and us go make a new all-time high and hit the air horn button and all the other fun things. So now we're kind of back into that camp where, as far as longer time frame options activity, it's skewed to the call side a little bit. The gamma exposure is. I wouldn't say this is all call activity. This could be hedges and could be a number of other things, but right now, as far as acting like a magnet, the big one to watch this week, given its options expiration, is probably going to be closer to 5,700, kind of that, line in the sand, maybe even the all-time high mark area on SPX. When we look at it from a gross gamma perspective, you got to keep in mind the other strikes in this general area, the 5,600s, the 5,550s, which I would not be shocked at us going to potentially, rebid off of, or at least retest in the earlier part of this week. And then nobody on options expiration can rule out something like 5,500 and even 5,400, given the low of last week. You kind of have to operate that, one of these directions is very possible. And given how much we've been selling off the highs of the general area that we are opening at to start Globex here, and given the NASDAQ just unable to kind of get back above 20,000, you need to take some of these things seriously, especially given the event volatility that's possible this week. Like I said, given options, we may get wedged, between two of these larger strikes. But it's also very possible that once we get the forecast from the Fed, as far as, cuts for the next few months, weeks, years, whatever, that some of this options positioning, even intra-week, could change very dramatically and could be a little more volatile than options expirations typically are in the past. So just something to keep in mind. And the reason we're going to continue to talk about this week is because these levels we're going to have more relevance, or are going to be better to focus on than ES levels at times, just given, or not the levels themselves, but the numerical values, just given that it's contract roll. And then, we could be trading, I didn't look at the Z contract, but it could be like 80, 90 points higher for all I know. So yeah, we'll focus on, or I will always try to make references to SPX numbers. That way it's easier to figure out versus everyone having to do math of 70, 80 points, whatever. So yeah, the logic is, given options expiration, given contract roll, everything else, it's a good reason to also kind of just let things settle to start this week. And then we roll right into FOMC. So like I said, an FOMC on options expiration is always just a fun event. It just changes the way I trade. I definitely am going to trade a little smaller this week and very much see profit, take profit. I have no interest in trying to catch one of these violent moves. I don't really ever trade FOMC to begin with. So I'm going to definitely try to get my points Monday and Tuesday, maybe not even trade much on Wednesday. And then, try to be out early by Friday with the way my week's going to shape up. So yeah, we'll go into some questions here. I did want to jump back and see kind of where we are trading, if anything has happened. We jump to ES, and let me get out of a 1 hour chart now, since we've had some time to kind of talk about this a little bit more. Yeah, so still trading right around. No, I guess no, we're a little lower. No, where did we close on Friday? We were right around 56.30, weren't we? Yes. Yeah. Sorry, the reversal challenge got me. I was looking at NQ and I could not remember where roughly we were trading. But yeah, guys, that's the rough prep. Given like I said, that we're back in these two balance areas, given that it's FOMC, given that all this uncertainty that could potentially happen with options expiration as well. The same rules apply that we had talked about on ES. I'm not really looking to engage up here. I most likely am going to be looking maybe back to this general area from the 12th, and even the other one towards the end of this, the move we had on Wednesday, that violent push up. This is a consolidation area that I would expect us to potentially go retest on NQ. That's, the same type of areas back towards 19,300, 19,200. Yes. Yeah. So, and even the 400s being, Friday's lows, could act as a pretty solid area that we'd be looking for a potential rebid. But I have no interest in trading, this general high up here, and even, trying to catch along above 56.40 to, 56.70. I just am going to be a little hands off up here. I don't love that we're back in this area, and once again had trouble kind of, continuing to push. We really did kind of just slow grind and stall up here. You didn't see a ton of enthusiasm from buyers. So like I said, sit on the hands, let things kind of evolve in the early part of this week. I would not be shocked if we get some early weakness. And if we don't find buyers up here, we may retrace a lot of this, lower volume areas back from Wednesday, where we could finally go back and maybe refill, like I said, 55.25, which is why I was kind of referencing my pivot being lower, 55.60s, maybe even 55.40s, before I'd want to get too bearish just looking at this. But that's the general idea. If I want to buy this, I want to buy it a little lower personally. I don't want to be the first person to try to long up here for like another failed breakout of 56.70s. So that's how I'm looking at this. But yeah, guys, if you have other questions, feel free to start feeding them in the chat. Andrew will grab them and I will continue to, go through them and answer any questions here. But this is a lighter prep. Like I said, just because of where we are trading, there's only two places that we can go. And it's either we're going to go make a new all-time high in ES, or we're going to fail and fall back into last week's distribution or the last 2 weeks distribution, which makes a lot of sense. If I'm looking at this, where's the path of least resistance? Well, it's probably to go back and fill in more volume, under 5,600 personally, but we'll see what happens. That's how I'm looking at this. That's how I'm reading this. Longer time frame, yes. If we get above 56.70, all-time highs, hit the air horns, and let's party and wait for Papa Powell on Wednesday. So I'm gonna get into some questions here. Nick, do you use TPO charts at all? I don't, as far as actively in my trading. I do like to review them every once in a while, but having a good understanding of single prints and other things, like I do it a different way. I don't necessarily use TPOs to do that. A lot of my charting software just spits out some of that information when we have single prints. And then I'm a big volume profile guy as a whole. So the period itself is a little less relevant unless it's a single print to me. So that's why I don't typically trade off TPOs. It's, I can get the information when I need to. I can have them, pulled up, but it is I do have a lot of, trading buddies that do use them. It's just personal preference for me. Hey, Nick, have you reached out or talked to Rafa? No, I have not. I actually would love to pick his brain. There's a number of traders that have, been up and down the leaderboard or are, anon on Twitter, but are doing very, very well. I would love to pick a few of their brains just because I've even seen some of them take the same trade I've taken, but they handled it a little differently. And I just would love to understand from a lot of good traders out there, others that I have a lot of respect for. It's just sometimes not necessarily like, oh, why did you take the long there? I more so want to hear how somebody else may articulate what they saw, what got them in, why did they exit, how they managed it, what they were seeing. Because if Dakota and I last week were on some of the same trades on Wednesday, and the logic is, though, I'm always curious, some other traders, like, how are they, like, if they're seeing the same thing I'm seeing, or it's the same setup, or they want to take a similar trade, how are they describing what they're seeing, and what am I missing, I guess, from my learning or my expertise that I'm thinking about it a little differently, but we both saw something similar in the price action to give us confidence to enter said trade. So as far as Rafa and some of the other guys that have been, on the top of the leaderboard, yes, I would love to understand not necessarily their strategy, just how they kind of read markets, how they read price action, and what gives them confidence in certain setups, and like, how do they articulate a setup versus how I would articulate what I'm seeing happening? And then where's that gap, and what I could potentially, learn from how they read it. So that would be awesome. I would love to. I know a lot of them outside of, I guess, Coach DBA and myself on the leaderboard. Nobody else wants to quite dox themselves or give into that, basically expose that part of their life and their privacy. So I respect that, because if I was still a 9-to-5er in, big tech and Mag 7, I probably would be in that same boat. Had I not been laid off, I probably would be like, no, guys, pound sand. I'm a non-trader that's doing well. I have no interest in going on the show. But as somebody that was laid off, I don't care anymore. Let's see. Oh yeah, this was the volume profile one. Can you please show how you have your volume profile set for both daily and overall? Yeah. So guys, TopstepX hasn't released the volume profile that you can basically define, like, oh, I want to look at 1 day, 1 week, 1 month. The one that's available, or the two that I use that are available right now, are going to be the basically the fixed range volume profile, where you can actually have it saved as, one of your favorites. And then all you need to do, for example, is just, you select it, and then you can basically just draw. Let's just grab it to make everybody happy. So volume profile, fixed range, I have it saved. But you can basically just select it and then just draw the level of candlesticks, anything that you actually want to get a volume profile for. So I want to get the last 2 days, basically go back to September 12th or that low. It'll give me the volume profile for just those specific candles that I basically just highlighted. So super simple. And then the other one I use is going to be a visible range volume profile. Let me get rid of this, where no matter what time frame I'm looking at, so if I wanted to go back to kind of, the November low here, whatever it is, it's going to adjust this, longer time frame one here on the right based on the candles that are on the screen. So it just allows you to go back, to the year, to wherever, and get the full volume profile there. And there is a lot of value there. I know we haven't looked too far in like longer time frames. But even just going like, on if I were to go to a daily, of course let's not do this, because we're just going to go down a rabbit hole here of me trying to, change the way my TopsetX charts, which I don't do, like, some of my longer time frame charting inside of TopsetX, because it's my execution platform. But I do some of these longer ones inside of TradingView, inside of MotiveWave, whatever, just because I execute on, this one chart. So me jumping from a day timeline, a month timeline, time frame, I don't always do that. So let's not break my charts trying to turn this into that type of platform for me right now. But yeah, guys, that's how I kind of use it. So we're back at a 4 hour. I can zoom out and grab, longer time frame areas of interest just based on this. So you have low volume nodes here, you have higher volume edges, just areas that would make sense from a longer time frame, from a swing time frame that you could actively engage in. Do you use RTH or extended trading hours when you draw your volume profiles? So this is personal preference, guys. I like to include all of the volume from Globex regardless of the time frame. So a lot of my, my ES, my NQ charts, I include everything. There's value there, in my opinion, versus only doing RTH, just because there's, I like to understand, when Euro is bid, when the Asia session is selling or is bid, and, where the highs and lows of some of those sessions was. So you can visually just look at it, but I think there is some value to having, that data in your volume profile as well. Really up to you though. Hoop. Nick, how do you treat the SPX options with the roll? To be honest, I don't really look at it any differently, just because it's the same logic is I'm looking at it, not necessarily in real time, but in, larger time frames. So 30 minutes. So I'm still seeing how those larger institutional players are adjusting or changing when those crazy rolls are happening. And we had some violent moves at the end of last week, but nothing on the options chain that really stuck out to me for me to want to treat it much different. The same rules apply. And when you look at it, I would say This is why I think I've talked about this concept when you're looking at some of that options data. If you look at it, if you try to look at it in real time, you can find a lot of noise just because you could probably see what Hoop's asking or probably referencing, potentially asking me, which is sometimes when someone would roll a position, you may see some weird data and it may just kind of give you a false signal, if that makes any sense, because you think you're seeing one thing, but all potentially someone's doing is just rolling to the December contract while simultaneously moving options from the September contract to the October contract of SPX options. So you may just see weird things, but it could just be a larger player doing something as simple as that. And it doesn't actually mean that they're, buying a bunch of puts or whatever. It just means that the position is potentially just rolling. So that's why I typically don't like to look at it in real time anymore. It just became such a, just chaos of trying to understand what was actually happening versus what I thought I was seeing, excuse me. How do you get a day's volume profile? So if you're using Topstep X, like I said, you can basically just, go to a 5-minute chart, a 30-minute chart, a 1-minute chart, depending on what you trade on. And you can either use a visible range like this and just have, the day's candlesticks and it'll populate what that profile looks like. Or you can then, after the fact, basically draw it so you have the previous days as the new day is starting. Or, if you're using a different software or you're using TradingView, or when Topstep is going to give me the one I actually want, which is kind of the one that I can just type in one day and it'll spit it out right on there for me. So it just has a rolling one to make my life easier. So once they add those, like the one that's in TradingView is the kind of the one I'm referencing. But until then, it's super easy just to draw this, just to grab it and draw the day's worth of candlesticks. And in fact, it actually is easier than you polluting your whole chart with nothing but volume profiles here, because I can just quickly grab this whole section instead of having 3 different ones, would be the logic. Do you use cumulative volume delta as part of your trigger system? I don't. I've used stuff like that in the past. It's just never really registered with me. There's other ways that I read time and sales personally. That's part of, what causes me to pull the trigger and enter trades at times, but there's a million different ways to read time and sales. So that it would be one, that does work. I just never got too comfortable with reading it because I think it's somewhat delayed personally compared to actually seeing some of those larger orders hit time and sales and having other indicators that can spit out, better ways to look at it. Can I show my volume profile settings? Of course. So personal preference here, guys, on the inputs, I use ticks, and you can change your row size. On NQ, this may be too small. To be honest, you may have to go to a larger tick value of like 4 or 8 to get this to look clean. But on ES, I use 1. It's really, like I said, it's personal preference. TradingView doesn't break because it doesn't actually use tick data technically. And then my volume profile style is going to be like this. So I remove some of these other, ones. I like to have the point of control visible. I just like to change my colors personally. I usually would have one solid color and not really care about the value areas because I can visually understand where they are. But it's really, really your call. But this is kind of how I have it set up. The value area, I keep it 70%. But as I said, most of the time I keep these as one color. So it's a little less relevant because I've just been using volume profile for so long to trade that I don't really need to understand it because it doesn't, me looking at where exactly is the value area low versus me understanding it visually is a little different. Someone asking why do I use ticks? Guys, it really is not relevant as far as like, oh, he uses ticks versus this. It's just to get a cleaner picture of this. That's all I used. Like why I put it as ticks is I just want a super basic, histogram that is very easy to understand, low volume areas, high volume areas, and where in the price it is. So for me to visually do that, I don't want these big bars inside of my charts. I just want a very clean looking histogram that allows me to just find high value areas, low volume nodes that I can interact with. So that's kind of why it really is just an easy way. Like I said, TradingView or the TradingView charts inside of Topstep X historically have never used like traditional tick data. So like I said, it's just a way for me to look at it a specific way versus me thinking it's like traditional tick data that I actually am actively using. So don't get too in the weeds there. It's just a way for me to visualize this histogram a little better. So yeah, guys, are there any other questions? If not, we can all get back to our Sunday evening. I got a few steaks in the sous vide that I'm going to go throw on the old Kamado grill. I'm sure Jack is doing something very similar if he's tuned in or he's watching, but I got a few steaks I'm going to go cook. So if there are no other questions, we can end this and everyone can go back to their lovely, lovely weekend and Sunday nights. And you guys will see me again tomorrow morning on Fast Markets. But if you can't get enough of Topstep TV and our content, then come back here in about 2 hours. That's a little less than 2 hours for Coach Dakota himself. If you missed last week or you're living under a rock, Dakota did a takeover with me, with Rips, with Coach Jay, with some of the other crew members. Even D came on and joined us, late London time to hang out. So he will be back to start for his usual Sunday night programming. If we can wake him up. I don't know, Andrew, has anyone checked on him? Did he sleep all weekend? I really hope so. But he will be back doing slow markets this evening, as well as D for the London Open at, I believe, 3 a.m. Central. I'm always asleep. But don't you worry if you didn't love the Dakota Nick every team takeover last week. The regular Topstep TV team will be back tomorrow to, save us and save Dakota, probably hours of sleepless nights as he's continuing to try to run OBS and keep us all sane and keep us all provided with content and like he was last week during the offsite. So the regular team will be back tomorrow, and we can focus on being traders again rather than trying to be a production crew. I give the team a lot of credit, guys. If you didn't understand how much goes into even a YouTube show behind the scenes, that's whatever 7-8 hours a day, you would be shocked. It does take a lot of work and it takes a team, and I'm very thankful for what those guys do, guys and girls. But yeah, guys, I will let you all go. Thank you all for tuning in. If you are watching this tomorrow morning or, pre-market, whatever, hopefully this has been some value for you. Please be careful. Please trade safe. This is going to be a super crazy, most likely stupid week to trade, given options expiration and given FOMC. So trade safe, trade smart, have some fun, and I will see you all tomorrow morning, bright and early on Fast Markets on Topsetp TV. Take care, guys. Have a good night.